Okay, I think we're live. Okay, so hi guys. I think everything is working well, and I'm going to kick off the webinar today. Okay, cool. Hey guys, so today we're going to look at how to help you stop being so overwhelmed and start becoming more profitable. And I think that from my experience, being overwhelmed with all the information going on with trading and how to sort everything out, it kept me stuck in kind of a cycle of losses for a very long time. So I'm quite passionate about sharing what worked for me and what I think really helps make that kind of just get you out of that cycle and onto a path, just a better path, I think. So today we're going to look at the two numbers that I really recommend that you start obsessing over, because the thing is that most traders that aren't profitable yet actually look at everything. They look at too many factors. They do too much journaling, too many record keeping. They're keeping too much. And actually, when you're recording and keeping everything, you might as well keep nothing, because you can't see what's really important. So today I'm going to talk you through how to stop that and start actually doing less, which is quite cool. It's going to give you a lot of time back, but it's going to give you just clarity, and clarity helps to stop the overwhelm so that you can actually focus on what's really, really important. Okay. So my name is Marisa. I'm a Forex trader and a performance coach with City Traders Imperium. It took me a while to become profitable. I really struggled for a while. I think all traders do. And for me, it wasn't finding a strategy. I actually had loads of strategies. I kept jumping from strategy to strategy until I was like, all of these seem like really good. My back testing results, everything works. When I demo trade it, it works. But I just could never make anything work in live trading. And for me, it was that psychology and the mindset around it that I really kind of realized was holding me back. So that's kind of what I share and talk about 90% of the time, because I think you should be spending 90% of your time on that. It's what's really going to make the difference to your trading. So before I kick into what we're going to cover today in detail, let me just check that. Okay, everything seems to be working and the sound is working as well. Cool, okay. So we're going to look at, just deep dive a little bit into why most trade reviews don't actually work. And then we're going to look at the two numbers that you should be tracking. And these are the only two numbers I suggest you track, even if you just stop everything else for a month. You need to do this 4 weeks in a row, okay? And that's going to start, you're going to start seeing the difference. Just trust me that that's going to happen. And then we're going to look at the actual process of how to do this review every week. So it's really simple, but every week you need to be doing these steps and then finding these two numbers, and they're the only two numbers you need to be tracking, and seeing how you're improving these two numbers every week. And then week on week, as long as you're making those improvements, it's going to improve your trading. But there's a little kind of underlying benefit you also get, and I'm going to cover that as well. Okay, so let's dive straight into it. You know, before I became profitable, I think my first breakthrough was trading Tesla stocks. I thought I was scalping, but I think I was actually just day trading. And I was trading a really simple little strategy, about an hour, half an hour after open, and I trade for about an hour. and it was really good. I was extracting profits from the markets, and actually looking back at my records, they were pretty decent profits, like good percentages. But I could never string a few days, more than like 2 or 3 days together, before I would either just start trading randomly in the afternoon, or I would be I would mess it up. I'd start taking trades that weren't there. I would kind of pre-run trades. So I'd think that something's going to happen and jump into the trade, or then I'd kind of sit on my hands and not do anything because I got scared. And I was kind of oscillating between these two things. And this went on for weeks. And I was really frustrated because I could see that the strategy was working. It was my first kind of, actually, I can extract money from the markets, but I couldn't keep it. I could not make that equity curve go up. And actually, over time, it just slowly went down, like slowly, but eventually I lost the entire account. I was actually trading my own personal accounts then. I hadn't discovered CTI yet, and I wasn't doing funding accounts yet. So it's a big reason why I now recommend that if you're learning to trade, if you're trying to become profitable, the best way to do it is through funding accounts, because it minimizes your loss. I blew an entire account. It was £2,000. For me, that was a lot at the time. And I think even now it is a lot. You blowing that whole account is a lot. It hurt. It's still, it still feels very fresh. But I was keeping records, and I could see that I was making some good trades, and I didn't have to trade it perfectly, but I could extract money from the markets. But then I was doing a lot of things wrong, and by the end of the week, my records were just, I kept some records, I hadn't recorded everything, I had, everything was a mess, and then I needed to do a weekly review, and I was just exhausted. I was emotionally exhausted. I was mentally exhausted. I was looking at a P&L that was just slowly going down. And the last thing I wanted to do was a weekly review of what had I done. I didn't even know where to start. I was like, I'm not even sure what I've done or haven't done this week, because my records kind of stopped 10 trades in. And it was just the overwhelm. I knew that I was just doing everything wrong, but I couldn't really see what I was doing wrong. And so I'd be like, okay, just take a break for the weekend and then start fresh on Monday. And then the cycle would just repeat. So this might sound like where you are at the moment, is just that by the end of the week, everything's kind of not looking great. Everything's messy, but you know that your P&L is going down, and you know that you've, again, not had a good week, but you don't know where to start, okay? And we need to clear this up, because it's really important to know what to be really clear, like, what have you done well, what have you not done well, where are your problem areas, so that you can focus in on those. And if you've got no clarity around that, it's really difficult to improve. So it's not, if you are spinning your wheels, it's not your fault. It's that you need some process and some, just clear the chaos, so that you can focus on what's really important. And at the time, how I cleared this for myself was that, well, one thing is, after a few months, I actually got myself a challenge account, and I started coaching with Daniel Martin at CTI. So that was really helpful. But I also, at the time, was working at my job at an investment bank. And my role was, I was managing a large project, kind of, it was quite complicated. And every 2 weeks, I'd go to a very senior meeting and go and give them feedback and report on where we were at and give them an update. And what I realized was that for that meeting, I had to spend quite a lot of time just getting rid of all the noise, being like, that's not important, because there were so many things going on in the project. There were so many reasons why things weren't working. There were so many obstacles, barriers, risks, issues, all of these things. But I was seeing someone that was so senior in the bank that they don't have time to absorb all of this. In those meetings, I probably had 3 or 4 minutes to present what I needed to tell them, and they needed to know the most important things, like, what was the takeaway. And the other thing I learned that I think is just common knowledge, but you become very zoned in on it when it matters to you, is that when you are giving someone information, they only absorb 20% of what you tell them. So even this webinar, it's worth taking notes, but go back and watch it again, or other webinars that you find important information or books you've read. Go back and read them again, because you do actually only absorb about 20%. That's not you, that's just us as humans. So what I was doing in my day job at the bank was spending a lot of time refining the message and getting rid of the noise and being like, what's the most, if I have 2 minutes with this person and they're only going to absorb 20%, what's the takeaway message? What do I want from them? And when we become traders, we kind of forget that you are the senior person in your trading business. So when you're doing your end of week review, you're actually providing a report to yourself, but you're kind of your boss. You are your boss. And when you're your own boss, it's also hard to always be accountable to yourself, because it's so easy. And I know from experience, it's so easy on that Friday to look at the mess that you've created and just be like, oh, I'm going to just miss it this time. Next week, I'll start fresh. I'm going to do it really good next week. But you are a business. And one of the hardest things transitioning from being an employee to wanting to do something like trading for yourself is the accountability and being accountable to yourself, because it's easy to give yourself a pass. Okay, so one thing is that end of week report that you prepare on your performance for the week, your records, and then doing an end of week review is really, really important. Don't skip it. But secondly, you have to refine the information, because you also cannot absorb everything. Okay, you can't absorb all the details that's happened in the week. So a lot of it becomes redundant. It's if you're recording too much, you might as well record nothing, because you're not going to absorb anything. Nothing is important because there's just too much. Okay, so here's the good news is, one, why do weekly reviews not work? Well, one, they don't work because they're not being done. You have to start doing them. And two, they don't work because you've got too much information. So I'm actually giving you permission now to stop recording everything. It's more important to record something that's going to matter and make a difference than to record everything. So if you're recording your entry price, your exit price, your stop loss price, it's not important. The price that you entered at or the stop loss price is not important. There's so much data that you're probably recording that's not important, and you can stop doing it, because it's one, wasting your time, and two, it's stopping you from doing what's really important. Okay, so just have permission to not record everything, because sometimes when we're busy, really busy recording everything and just doing so much, it can feel like we're productive. It can feel like we're doing things, because we're trained in jobs. When you work for someone else, being busy and productive, it feels good. If people can see you're busy, so you must be doing a good job. But we want to work smart. Okay, you're working for yourself now if you're a trader, or if you're trying to be a trader, you are working for yourself, and you work for your own trading business, and you need to work smart. Okay, so you've got permission to stop recording everything. Okay, now let's look at the two numbers that you must record. Okay, so it's pretty simple. You must record any trades that you missed, any trades that your strategy said were yours and that you missed. You need a tally of how many, of when they happen and how many. Okay, and the second number, I'm going to tell you both numbers, and then I'll tell you why they're so important. Okay, so missed trades is number one. And you don't need details of the missed trades. You just need a number. Like if you've missed a trade, it's a number. It's one. Just count how many trades you've missed. And the second one you're going to record is how many trades you took that didn't match your rules. So you took them when they weren't actually your trade. Like when I was front running Tesla, I thought a candle was going to close in a certain way, so I'd jump in quickly. those trades were not my trades. So we call them broken rule trades. You can give these things your own names, but it's basically where you're not taking your trades, missing trades, and two, you're taking trades that aren't your trades. These are the only two numbers you need to start obsessing over. Now, missed trades, what it tells you is if your number is high at the end of the week, and you can have a high number, and you also want to have a percentage of the overall trades that you took. So if it's a high number, but it's a low percent, because, if you missed 20 trades, but you took 100 trades, is that high or is that not high? Well, there's judgment call there, right? But if you only took 10 trades or had 10 trades for the week and you missed 3 of them, it starts becoming more of an issue. That's 30%. So it's relative. Okay, so the number's important, but it's relative, right? Missed trades. What it's telling you is your fear and doubt and uncertainty is high. So this is a direct KPI at the end of the week that you're telling your senior self that's managing your trading business, is that during the week you had very high doubt, uncertainty, and fear factor. It's very high. So you were sitting on the sidelines and you weren't taking the trades. The other thing it could be telling you is that you missed a trade because you weren't there. You missed it because you didn't see it on the charts because you weren't there. Okay, so that's telling you that your processes are your routine, like being at the charts for the same time frame and kind of performing the same processes day in and day out. You're kind of a little bit sporadic, and that's impacting your ability to trade your strategy, how you back tested your strategy. Because when you back tested your strategy, you just did it in one big lump go, right? You didn't have to do it in a live environment. So when you go live, you can have issues with timing of turning up to the charts when the trades are there. So it's another thing that missed trades can tell you. The final thing that missed trades can tell you is that you were there, you weren't fearful or you didn't have doubts, but you just didn't see the trade, okay? And this is telling you that you're not recognizing the trade pattern. You're not recognizing your entries when they're there in the live environment. When you're back testing, you can recognize every entry. Now, why is it? That's a different environment. In back testing, you don't have any stress, you don't have any pressure. As soon as you go live, there's pressures on you. So the way you're seeing the charts and identifying your trades starts kind of breaking down because the overwhelm is starting. So you might not recognize it as you saw the trade and you decided not to take it. You just didn't see it. Okay, but this is now all valuable information that this one number is starting to tell you. Let's look at the second number, the broken trade rule, the broken rule trade. So this is where your rules were saying this isn't a trade, but you took it anyway. If this number is high for you at the end of the week, it means that you've got a lot of FOMO. You're front running, you're jumping into trades that aren't there because there's lots of reasons, but often it's because you don't want to miss out. You're scared that the trade's going to run away from you. You get too excited, you get greedy, but it's telling you something. That number is telling you that is very high on your, in your performance. That's affecting you a lot because you've got a high count. Now, my experience is that I had kind of a high count for both the first time I did it. With the Tesla, the FOMO trades was very high for me. But as I started doing this review every week, I actually sorted that fast. That was something that as soon as it was kind of very clear to me, like a few weeks in a row, it was just this really high count. I was able to focus during the week and just because it focused me on that is an issue for me. And I didn't have to focus on anything else. It was just I know that that's an issue, so I could really concentrate on it. And when that kind of desire came up during trading, that I was like, oh, there's a maybe I'll jump. I would think, actually, I want this number low this week. Let me just not do that. Now, are you going to the first week completely solve all of that? No, but it's going to give you a fighting chance. It's going to give you an edge to, when that happens, you're going to be thinking about these two numbers at the end of the week, or the last numbers you looked at that week. It's going to be fresh in your memory, and these are the only two things you start to obsess over. And it's going to just give your front brain an opportunity to kind of think and go, actually, if I do this, I'm adding to the tally. And that's sometimes enough to just stop the emotions overriding and just doing. And that's all you need. It's just giving yourself an edge psychologically to do the right thing, and then you'll slowly stop doing the wrong thing. If my FOMO trades number was really high, and I solved it in a few weeks. It was really fast, and my FOMO trades, I haven't taken them for I think since I passed a challenge account, I've never lost another account, and my FOMO trades they just are non-existent. It's very rare for me to jump into a trade that's not there. Now, that's my experience. It was the thing on my psychology and mindset that I found the easiest to resolve. Okay, it was my biggest problem, but then I found it the easiest to resolve. The thing that then became a higher number for me, and percentage-wise, it became a higher number. And I think it's because the other number went away. It kind of was always zero every week. But I had a high number of missed trades, and missed trades can really stop you from becoming profitable, because with missed trades, sure, you might miss a few losses as well, but those, as long as you're managing risk, those should be one risk reward, one RR, a set risk. Okay, so you miss those, great. So that's kind of good for you. It's not really good for you, but let's just say numbers wise, it's good for you. But you're also missing your profitable trades, and if you're missing your profitable trades, your entire strategy will not work, because the profitability of it depends on you taking every trade, because the losses will be the losses, but when you get the winners, they work. So what I was finding is, even though I started to reduce that number, I had weeks where I would end the week with my P&L down, and I felt like the week had been terrible. But when I did these numbers and I came back the next week, I realized that I'd only missed like one or two trades, and those happened to be the winning trades. So I was making very few mistakes, but the mistake was on missing the trades. And often it was, for some weeks, I've missed so much profit from just not taking trades. And that realization to me, having that clarity, started making me go, actually, even when I feel fearful, even when a trade doesn't feel right, as long as it's ticking my rules, it's better for me to take that, even if it's going to be a loss, because not taking trades, missing trades, was keeping me unprofitable in a really bad way, because my accounts were slowly just decreasing, because I was never getting those profit bounces. And I started making fewer and fewer mistakes of this, but I realized I couldn't make any mistakes. I couldn't miss any trades. It was almost better for me to make a mistake and take a trade that wasn't mine, because the damage would be one loss, than to miss a trade that was mine. So if uncertainty crept in, my brain could override that emotion that was going on and go, is this your trade? Just remind yourself, is this your trade? Then you must take it. And that's the power of tracking these two numbers, is that it's going to zone in on what's really, really, really important. And that's that you take all your trades, because in back testing, you took all your trades. So in live testing, you must take all your trades to get the profitability profile that your back testing said this strategy would give you. So let's look at some practical steps. How are we actually going to do this? Okay, so you finish your week. So step number 1 is just go and check that all your records are complete, that you've recorded every trade you took. Now, all you need is you might also take a screenshot of your trades, but you just need a date or a time, something that means you can identify that trade. If you needed to go look for that trade again, you need a date and a time. So I trade, my entry triggers are on the daily, so I just need a date and a currency pair, and I can go and find my trade because I know what the rules are around it. So as long as I've got that identifier, I can find the trade. So I need to have an identifier, the pair that I've traded, and then I need to have ticked that did this follow the rules or did it not? Was it a real trade or was it not a real trade? And that's the minimum I need to record. Now, you might want to record a few other things. So if you've got, entry A or entry B, or you've got some complexities in your strategy rules-wise, you might want to just record which rule did it meet. For my own records, I have all the rules that need to be met along the top of my spreadsheet, and I go and say, yes, 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 yes. I want that record. I don't record anything to do with the entry price, the exit price, the stop loss price. It's just that I followed my rules of placing those. And for this record, you also don't need to record if it was a winner or a loser or what the RR was. We don't care. Record that for some other purpose. But for your weekly review for this, if you're trying to become profitable, it's not important if your trades are winners or losers. It's that, did you take all your trades and did you take trades that aren't your trades? That's what you need to focus on. Okay, so it's nice for us to record RR and win rates and that's the fun stuff. So do that for fun after you've done this. This is the information that you need to every week be accountable to providing your senior your own senior version of yourself that's overseeing your trading business. Okay, so you need to go, step number 1 is just make sure that you've recorded all your trades. You've got a record of how many trades and you've got an identifier to go and find those trades. Then you want to go to the charts, you want to clear the week. So you want a fresh chart, and you're going to actually do back testing for that week. So you're going to do just back test the week fresh. Don't refer to the trades that you took or your live trading. You want to, with a fresh pair of eyes, just do back testing. Okay, so you're going to have your back testing results for the week, and then you're just going to compare them. This is going to give you the evidence to look at your records and go through and be like, that was a real trade, a real trade, a real trade, a real trade. Perfect. Just ignore those. That I missed this trade on the back testing. I missed these 3 trades. And then you've got some spare trades on your live record. These are obviously trades that aren't in your back testing. Okay, that's enough. So now you can do the numbers. You can do total trades I took, total trades I missed. So that's the difference with your back testing, and total trades that you took that aren't in your back testing. And there you've got your weekly review. It's actually really easy to do. And once you've done this a couple of weeks, you'll also start keeping your records a little bit fresher because it makes that review so quick. The last thing we want at the end of the week is to be burdened with, trawling through data and not being able to find trades we took. This is just pretty easy. The back testing should be easy, and then any trades that aren't on there, you can just assume those are errors. Those are trades that you shouldn't have taken. Okay, so now you've got your numbers. You can start giving yourself feedback, and you can be really clear about what's driving your behavior. Is it that you're more fear-based and you're missing trades? Is it that you're just, forgetting your strategy and just taking any trades because you're trading on feelings? And then you've now got feedback. You've got kind of real-time feedback. It's at the end of the week. And then for the next week, you can just know what to focus on, and it's going to help you have clarity. It's going to stop a lot of the overwhelm, and it's going to give you data that actually matters. So you stop it's going to give you so much time back during the week. It makes such a big difference to clear overwhelm and clutter and not record so many things, because if they're not helpful to improving your trading, they're not required. Trading is just about executing your strategy, and if you're doing anything that's not supporting that, it's just not required. You can just get your time back and focus on some other fun things. So I hope you enjoyed this webinar. If you've got any questions, post them in the comments. I'll come and see if there's any questions and answer them. If you're in City Traders Imperium Discord already, you can find my channel, Coach Marisa, and you can ask me questions there. Happy to help with anything. And good luck for your trading. Start implementing this. My recommendation is to do it don't overthink it. Just do it for 4 weeks and then see if there's improvement. Okay, if you've tested this for 4 weeks and you're still like, no, I want to record everything, then you can do whatever you like. You are your own business, you are your own boss. But this is really going to make a difference. This is really what stopped me from staying in the cycle of failure and just kind of slowly eating away at my accounts and becoming profitable.